I finally found a simple explanation showing why homes are so unaffordable right now. Take a look. Home buyers need to earn 80% more than they did in 2020 to afford a home in today's market. Let's dig a little deeper. In 2020, a household earning $59,000 a year could afford a typical home priced at around $240,000. At the time, that income level of $59,000 a year was less than the US median income of $66,000 a year. Today, those shopping for a home need to earn $106,000 a year to afford a median priced home for $342,941. That's $47,000 more than they needed in 2020 to afford a home, and that's well above today's average income of $81,000 a year. But this is where most people stop. They say you have higher housing prices and you have higher mortgage rates, which is why buying a home is so unaffordable. But that's not all. You also have more expensive of a buying process. Your closing costs to buy a home have risen up to 22% in just 1 year. Now, the reason why these closing costs are so interesting is because, well, you might have heard the White House talk about recently how they want to start removing these quote-unquote junk fees that people have to pay. According to the White House, these quote-unquote junk fees include things like the surprise resort fees at a hotel, or those unexpected service fees when you buy a concert ticket, or those random extra fees when you buy a rental car. But now they want to include these closing costs into the junk fees as well. According to the White House, they want to start attacking this rising cost of home purchase loans, which surged nearly 22% between 2021 and 2022. Not to mention that the closing costs for a mortgage refinance skyrocketed by 49%. But that's not all. Your moving costs grew by 40% between 2021 and 2022 alone, and they've only gotten more expensive since. My wife and I recently did some furniture shopping. We bought a new sofa for our home, and I couldn't believe how expensive furniture has gotten. We bought a new sofa that could recline, and it cost $5,000. Now, this wasn't a high-end, artisan furniture store. This was a store called Value City, and we still had to pay $5,000 for the sofa that reclines. If you're thinking about remodeling your bathroom, get a quote before you predict how much it's going to cost, because a $5,000 repair a few years ago might cost you $7,000, $8,000, $9,000, or even $10,000 today. And the really interesting thing about homes becoming more expensive and more valuable is if you own a home and it's growing in value, that's good news, because now you own an asset that's worth more money. But that also comes at a price, because as your home grows in value, that also means your property taxes are rising. United States property taxes on single-family homes rose twice as fast in 2023 than they did in 2022. This was a full story that we wrote on Market Briefs, and the interesting thing about this is, even if you own your home free and clear, you still have rising payments, because as home prices go up, your property taxes go up, and your property insurance goes up as well. Market Briefs, by the way, is a free financial newsletter that I created through Briefs Media, where my team is working to break down what's happening in things like the housing market, the stock market, the crypto market, the global economy, and our own economy into a fun, witty, and easy-to-read newsletter. You can read Market Briefs in less than 5 minutes every morning, and it's completely free. So if you haven't joined Market Briefs yet, I got the link to how you can join down in the description below, or you can go to briefs.co/market. That's briefs.co/market. And if all of this wasn't crazy enough, in March 2024, the National Association of Realtors finally settled a lawsuit where people alleged that realtors were artificially keeping commissions inflated through their commission structure. Now, we're still going to have to kind of wait and see to see how this lawsuit is going to change the way that you work with realtors, but the whole thinking right here is now, as a buyer and as a seller, you might have to pay your real estate agent separately. Because before, your buyer's agent, your realtor, was getting paid by the seller. Now, obviously, you were the one paying the seller, because you as the buyer would write a check to the seller, and then the seller would write a check to the listing agent. They'd write a check to the buyer's agent. Now, what it seems like is going to happen, you as a buyer are going to have to pay your buyer's agent separately than how the seller is going to have to pay the listing agent. That'll be two separate negotiations going on. That's what it seems, but we'll find out more information this summer, so stay tuned on that. And then finally, we have the cherry on top, which is you have a lot of people holding their breath, hoping and praying that the Federal Reserve Bank is going to start cutting interest rates soon in 2024, so mortgage rates finally fall. Now, I do want to premise this by saying nobody can predict what's going to happen with mortgage rates in the future, just like how nobody can predict what's going to happen with the economy in the future. I mean, if you remember, the Mortgage Bankers Association came out a little while ago, and they said that mortgage rates would fall to 5.4% by the end of 2023. And of course, as we all know, that didn't happen. All this to say that the last few years in the housing market have been nothing short of crazy. But what I want you to understand is that no housing market stays in one place forever. The housing market, real estate prices, and every other asset class is cyclical. There are times where you're in a seller's market in the housing market like we're in right now, which is where sellers have field days. A seller that lists their home for sale might get multiple offers on their property, giving them the opportunity to sell their home above asking price. But other times we can also be in a buyer's market like we were in about 10 years ago. A buyer's market is now the opposite, where a seller needs to now offer a lot of concessions and discounts to attract one of the buyers to their home. And so now what you got to understand is no housing market stays in one place forever. And a lot of people have this kind of tunnel vision and this short-term thinking where they think the housing market is going to stay like this forever. But what we are seeing is that the housing market has cooled significantly since 2021. And what we're also seeing is that there are some issues in the economy. So what I want you to understand now is if you're thinking about buying a home, nothing wrong with that, but you want to make sure that you can afford the home that you're buying. And what it means to afford the home that you're buying means three things. Number one, you got to afford the down payment. Number two, you got to afford the monthly mortgage payment. And number three, you got to afford the move-in costs. When it comes to affording the down payment, I'd like you to put down at least 20%, if not 25%. That way you have some skin in the game and you have some equity in this home because you don't want to be running this too thin. Number two, when it comes to your monthly payments, you do not want your monthly mortgage payment to be more than 25% of your take-home pay. Now I know your bank is going to ask for much looser regulations. They'll make it much easier for you to qualify for more money, but I don't want you to have your mortgage be more than around 25% of your take-home pay because you want to make sure you have money to eat, you want to make sure you have money to travel, and importantly, you want to make sure you have money to invest into other assets, not just your home, into other assets that will actually make you wealthy. I am not of the belief that if you own a home and pay it off, you're going to be suddenly wealthy. If you want to be wealthy, you got to own other assets, things like stocks, things like rental properties, things like businesses, because that's where the real wealth is built. And number three, you got to be able to afford the moving costs. That means you got to be able to afford the movers if you need them. You got to be able to afford the furniture if you need it. And you got to be able to afford the upgrades if you're going to do them. Figure out what these costs are before you go inside the paperwork to buy a home, because what you don't want to do is you enter into a contract to buy a home and you don't really know how much this house is going to cost you, and then you become one of the many people that regret buying a home because you don't realize how expensive it is to keep up with the maintenance. You don't realize how expensive it is to keep up with the upgrades. You don't realize how expensive it is to keep paying the higher property taxes. You don't realize how expensive it is to keep paying the higher insurance rates. You don't realize how expensive it is to maintain the home. And instead of that, what I'd rather you do is not live paycheck to paycheck just so you can be a homeowner, but rather live comfortably by buying what you can afford. Yes, I know what I'm saying is more difficult. Yes, I know this is going to offend a lot of people. But if you buy what you can afford, then you can put more money towards your investments, which means you'll be able to buy a bigger home in the future, not have to worry about the price, because you put in the sacrifice, the financial sacrifice, to build your wealth first before you make everybody else rich when you go out to buy a home. This is a chart from the Federal Reserve Bank showing the rates of home ownership in the United States. And while home ownership today isn't at the 2004 peak, we're also nowhere near the lows. So we're kind of in like the historical average. Now, of course, real estate is a very local game. What's happening in one neighborhood might not be happening in a different neighborhood in the country.